I'm going to read a quote from Cameron and Tyler Winklevoss from Bitcoin 2021 in Miami, which is a great conference that I suggest you consider going to, which is happening in April. It was electric in many ways. Tyler particularly said, Bitcoin is gold 2.0. It will disrupt gold. So its market cap has to be 10 trillion or more because that's the market cap of gold. Bitcoin's hovering around 1 trillion now. It's at least conservatively a 10x from here. Even at $35,000, it feels like a really good buying opportunity long term because at a $10 trillion market cap, one Bitcoin will be worth $500,000. That could happen inside of this decade. So we're hodlers at least until 500,000. And then at that point, you won't even have to sell because you can borrow off of it or whatever. His brother Cameron agrees, quote, we're like 1/12 of the way there. And when we wrote that thought piece in August 2020, Bitcoin was at $13,000. It hit $64,000. The story is really just playing out. It's just getting started. The Winklevoss gold thesis postulates Bitcoin is in the process of disrupting the gold market. And they say that it's the conservative bull case. Quote from Tyler, obviously, Bitcoin's a lot more than gold. It's an open source project that continues to evolve and can do so much more. It can become the global reserve digital currency of the world, of the galaxy. When we get to Mars, what's the currency going to be? Is it going to be dollars? No, it's going to be Bitcoin. All right, so they really took off there at the end and went kind of haywire. But now the thesis is Bitcoin is gold 2.0, and therefore it must reach at least a $10 trillion market cap, which is gold. Do you agree with that?
The price target, look, this is how I look at this. I understand the current environment remains risk on. Okay. When this flips to risk off, meaning cash is going to leave, how this is going to happen is very, very simple. All right. I want people to understand this and keeping it is as easy as can be. Right now, we have suppressed rates now since the last meltdown here. This has caused massive distortions, massive epic distortions across the spectrum of asset classes here. Cash is moving into things it should not be going into and out of things it should be going into, coming out of, back and forth. It's crazy. So understanding that the current environment is going to flip over. I mean, markets went in cycles, risk on, risk off, risk on, risk off. I consider Bitcoin, cryptocurrencies really risk off, and look how they're performing right now. So what's going to end up happening here, we're going to get an implosion in the debt market, meaning you're going to see rates spike in an uncontrolled fashion. Okay, and it's not going to happen by accident. It's going to be something that's going to be set in motion here because we have a debt market in a hyper bubble, and everyone I think realizes that, which has inflated the stock market bubble. So how's this going to work out? We're going to get a spike here in the debt market. The 10-year yield is going to start skyrocketing at one point here. That's going to put a lot of pressure on the stock market. Stock's going to sell off. So you're going to have cash leaving the debt market, cash leaving the stock market. It's simply going to look for places to go. In my view, I've never wavered from this. It's going to make its way into commodities, gold and silver, crude oil, other commodities as well, hard assets, and it's going to make its way into cryptocurrencies. So where's the top? I have no idea. I really don't know. I don't like putting a number on it because I just want to see how it's going to play out, because what's going to happen there too. We're going to get an over correction here, or an over meltdown. I don't know how you want to put this in the stock market. The stock market is going to crater to a point when the debt market melts down that I think is going to be a mind blower to people. They're not even going to. And it's going to overcorrect. What I'm saying is it's going to go lower than its actual fair value.